Another segment that I wanted to add today is real estate, right? I never talk about real estate. I'm invested into real estate, but I never talk about it. So why not put it part of the market drip? So a couple of different updates that I have here for you. So the mortgage payments on the average U.S. home was 1613 in June. It's up 4.5% from a month ago and 62.2% from a year ago. It's crazy. Right now, the affordability is just not there. People cannot afford to buy homes, right? The landlords are taking advantage and they're increasing the price week over week. But I do foresee that this will definitely pop here very soon, right? On top of that, we see that, again, Apple, Google, and Microsoft are amongst companies that are slowing the hiring. Hence, people are getting laid off. The affordability is just not there at the moment when it comes to real estate. Something else that I also want to talk about is that although you see that the prices are going up, we are seeing an increase when it comes to price drop every single week. So on average, 7.3% of homes for sale each week had a price drop, a record high as far back as the data goes through the beginning of 2015, right? So I do foresee that we will definitely come back down. As many real estate gurus are saying that this is the time to buy. I honestly, me right now, as I said, and I also shared, I was trying to buy a home this year. I'm not buying a home this year. I'm probably going to invest that somewhere else just because right now it is way too expensive. And I do believe that we will come down here very shortly. I just believe that in the US, Americans have cash in hand. And until that cash is not spent, you're not going to see a drop and you're not going to see a crash. So it's just a matter of time until people actually get their money exhausted, if you will. Unemployment claims. So unemployment claims, the initial claims for unemployment insurance benefits, they have increased to $251,000 during the week ending of July 16. This is the fourth consecutive week of increases. And it also represented the highest print since November 2021, right? So this right now, and I do foresee that we're going to continue week after week. We're not in a good state right now when it comes to the overall economy. My biggest recommendation, of course, dollar cost averaging. You could definitely do that. Invest into the companies that you love. Continue to invest into those different power houses. Highly recommend you to, condense your stock portfolio to 4 to 5 stocks. I see people with 45 different stocks, and I just do not see how you're going to realize generational wealth by just owning one single share of a stock. It's just not going to happen, right? So instead of looking for the new shiny thing that's shining, stick to the ones that have been shining for decades now. So that's what I definitely recommend. And then on top of that, I highly recommend you to clear out debt, right? As inflation is going up, the interest rates on your credit cards are also going to continue going up. So I highly recommend you that if you have any debt, that should be your first target. Let me clear out debt, because right now debt is at an all-time high, right? When it comes to credit cards. And I also recommend you to save. Have an emergency fund. Things are not looking good right now. Like even restaurants, like you don't even see people going to restaurants like that no more, because people don't have the money to actually spend anymore. So it's really, really critical for you to have a plan, especially during these times. So my priority will be save, clear out debt, and then from there you could definitely invest. So with that said, let's go ahead and go into our charts here. Just one second. When it comes to SPY, I'm first going to cover SPY on the daily, and then from there I'll talk a bit about what we're doing right now in this current market. As you can see, I always have my alerts. Alerts can definitely bring efficiency into your life, and at the end of the day can help you optimize your time. All right. So first thing we're going to do is just cover SPY on the daily time frame and talk about the current market structure. For whoever traded this morning, you guys saw how volatile things what, but it did provide many different opportunities. So this is what we have right now, and I'm just gonna zoom in to the last couple of weeks, which is right now, right here. Right, last week we did see bullish continuation. Right, so 3 bars towards the upside. We hit 400.20, hence we could not break above. I did mention the level of 396. We have to break above that to be able to continue higher. And as you can see today, we did have a small pullback all the way down to 393. What do I foresee right now? I do foresee that, if we don't break above 396, so like for example, and I'll get my tool, just one second. Yes. If we do not get above here into this area and then be able to take over this level, then all we're going to do is just range, right? We're going to range. Now, if we break 392, 391, this is where we have the ability to go like this and come right back down. Hence making this just what? Hence just making this a lower high and us to come actually right back down, right? So again, 396 and 400 are the levels that I want you to take into account. These are levels are definitely very critical. I also want you to take into account that right now we are also above the 90 EMA, which is one short-term bullish sign that price is definitely going up higher. And then on top of that, buyers are also present. A question that I see here from the chat is why you picked 396. The reason why I picked 396 is because, as you can see here, look at this rejection from this day, a rejection from today, and then a rejection from even back in May. We have so many different rejections at this level until finally we broke above 397 and we were able to go back to 400s. So all I'm using, these levels that I have here, I'm just getting them from just previous price action that I see here. So again, 396 should be the one that we have to break above. And as you can see today, what's the high of today? 396.29. And what did we do? We rejected and we came back down. And you're going to see that even if I go to the 5-minute time frame, which is the time frame that we use, you can see this heavy rejection here at 396, right? So let's just quickly go over how you could have traded SPY here on the 5-minute time frame. And again, these are the exact same levels that I had. My 400, my 397.60. Why this level? Well, this level was a critical support level last Friday, right? And once we broke below that level, we had a big drop. And then I also have my 296. I have my 395, another support level that we broke back down. We went all the way down to 292. So again, I always have all my levels ready before I enter the stock market, before I even put in a trade. And again, I'm the only ticker that I'm trading right now is just SPY because it provides opportunities every single day. All right, so let's go ahead and do this. We open red candle. Red candle, I'm going to tell you something else. And again, as you can see, I only have my 90 EMA here. Just the fact that the price opened below the 90 EMA, what should be your train of thought? Can someone tell me? Price is below the 90 EMA. What should be your train of thought at this moment? Puts, easily. Bearish. We're bearish. We can even hold above the 9. Puts is definitely the way. And again, I keep talking about the ORB. ORB is a super simple strategy. I just get this ORB low. And what do we see here? Another break. I'm instantly in puts. This is where I called out puts right here. I'm instantly in puts. All right. So that would have been our entry right here. And actually, I'll just go ahead and put it like this so we can all walk through it. Right. Here's my entry right at this moment. Right. Let's continue playing it. What do we see? Price will always come back where? And this is where 90 EMA rejection is so critical. That is one of the strategies that I use every single day. 90 EMA rejection and 90 EMA bounces. That's how I'm able to make anywhere from 500 to 1,000 in less than 5 minutes, right? 90 EMA. And again, I do use both the 90 EMA and VWAP. As of recent, I've only been using the 90 EMA because I haven't had the time to wait for the price to come back down to the VWAP, right? So what do we see here? Price came all the way up to the 90 EMA. At this point, your train of thought should be like this. If it breaks above and holds above my 9, then it has the ability to go up. If it starts to wick, right, the more wicks I see, that's when I should be entering puts again, right? So what do we see? Long wick, another wick, I'm in puts.